All right, so how bad is our housing crisis, specifically here in Las Vegas? Let's do a little deep dive into what's going on. So I want to give you guys a bit of perspective historically so that you can understand what today's numbers look like. So for a decade plus, we would sell 4,000 to 4,500 single family homes in Las Vegas every single month, pretty much regardless of season. We didn't have much seasonality. That's what we sold. Give or take, obviously, different years or different months, but just to give you a good general sense. And the market was moving very, very well at that time. You would consider that a generally healthy market. And then obviously 2020 happened, huge influx of capital nationally, and there was a home buying frenzy, especially refinancing and purchasing with incredibly low rates that were historic lows that we may never see again, which we can kind of get into a little bit as well. And that pushed pricing and affordability just beyond most people's capability. So when you look at affordability right now, we're historically at the highest level ever. It's in terms of unaffordability. People cannot afford a house. And that's being translated into our market right now. And so in 2020, what you had was we were still selling those 4,000, 4,500 single family homes every single month, but our inventory was like 1,800, 2,000. So we were just moving through available listings. In half a month, you were selling everything that came up. So it was like you listed a home, it sold right away. That's what the market was like. Right now, we've gone over the course of the last few months from about 3,000, 3,500 single family listings up to about 7,500 single family listings on the Las Vegas market. That is a dramatic increase. And really, we were ticking down over a period of time. So since 2022, when interest rates first went up, you had an increase in inventory from the 2,000 number that was out there all the way up to like 9,000 single family homes. It shot up and then it came back down. And it came back down and it settled around 3,000. Again, I'm giving you some rough numbers. And then closings also fell from 4,000, 4,500 down to 1,100 single family home sales. And they stayed at that 1,100 single family home sales, 1,200, 1,300, 1,400, 1,500. Kind of went up for a long time. So the second half of 2022, 2023, 2024, and now 2025, the real estate industry has been in a serious recession. Massive recession. And it's a silent recession that no one is talking about because home values are still incredibly high. So you're not seeing a drop in home prices, but you're seeing the real estate industry be incredibly impacted. You're talking about essentially a quarter of the sales volume occurring than what was occurring. And so that impacts real estate agents, obviously. It impacts lending and mortgage companies. It impacts escrow. It impacts appraisers. It impacts every single company that's involved with the transaction, which is a huge portion of the economy. And so that whole industry, real estate in general, has been in really a depression for the last few years because of unaffordability and high rates. And so now we were starting to see the market balance back out. The beginning of 2025, we kind of had this little spurt of buying activity. There seemed to be a lot of new hope as the new administration came in and people were like, okay, it's time to get rocking. And so we saw buyers enter the market again. People were enthusiastic. We had some even bidding wars on some properties. That quickly went away the day that the tariffs were announced and the stock market took a hit. We saw almost a falling off of the cliff in the real estate industry. And it's kind of surprising that no one's talking about it. It impacted us heavily because there was a lot of enthusiasm, a lot of hopefulness about the future. And then the day that the tariffs were announced, and then the stock market took a massive hit, everyone kind of went, oh, whoa, I'm not certain about the future. I was certain about the future. I did have hope that things were on the right path. And now people are a little concerned about what's going on and can they make as big of a purchase as a home and feel certain and confident in the trajectory of the market and overall economy. And so from that day, the market again shifted back to kind of a decline. And we started seeing some pretty serious pressures build up. And I think the dam is breaking or has already broken in many ways. And so right now, 7,500 active listings on the market, huge increase in single family listings. At the same time, in the last 30 days, we've only sold 1,688 homes. Just a few months ago, we were at 2,500 almost. So we're now drastically decreasing month on month on month in terms of sales volume. We're going back down to incredibly low numbers, especially when we're talking about historical averages and norms. We're looking at very, very low numbers. Vegas is especially low in its transaction volume when compared to the rest of the country as well. We're lower than most metropolitan areas in terms of our decrease. So what we're seeing right now is that sellers who are looking at the most recent comparables and then adjusting their price 5 to 10% are having their home sell. So if they're dropping their price 5 to 10%, those sellers are seeing their home sell. Then you have another pocket of sellers that are not reducing their price at all. They're looking for the market to stay where it was, and they're looking for that number. And then you have another portion of sellers that are like, the market's still white hot. It's a great seller's market. There's no inventory. They haven't seen the news. And so they're pushing pricing as if it's 2020, 2021. And they're just not going to sell. That's just the matter of fact in the situation. So if your home is in really nice condition, it's fully renovated, it's a unique property, there's something special about it, you've got the right buyer, you're able to target the right buyer, sure, you can still get a premium in this market. But if it's a good home, in some cases even a great home or less, you're going to be adjusting price right now if you want to sell. So if you want to sell, you're motivated to sell, you're going to be adjusting price. That's just what's going on. It's what we're seeing. Every single listing that we're putting under contract on buy side and sell side, it's a 5 to 10% adjustment. So we are witnessing a 5 to 10% pullback in real time in the market right now. So anticipate a 5 to 10% adjustment in overall numbers over the course of the next several months. With all the uncertainty in the market, we don't know what the stock market's going to look like, what the economy is going to look like, and so people are still reserving themselves. The sellers who are just sitting and holding on price, they're largely not motivated. They're like, if I get my price, then I can move over here, I can achieve that, but if not, I'm happy where I am because I have a 2% interest rate or a 3% interest rate or a 4% interest rate. They're going, and I bought when house prices were half of what they are right now. So they purchased homes years ago. Let's say they purchased a house in Las Vegas in 2018, and the home price was $400,000. That home price could easily be $750,000, $800,000 in today's market. Easily be that price. And so they are paying $2,000 a month in mortgage payments. If you were to buy that house now with the mortgage rates as they are, you're paying $5,000, $6,000 in mortgage payments, depending on down payments and what you're getting and all that stuff. It's incredibly more expensive. So a lot of people are looking at the market and going, if I'm going to move up or move down, it really has to be the perfect storm, because they're locked into these incredible interest rates for 30 years. There's no financial reason for them to sell. So that's why you're not seeing the broader market adjust its price and you see correction in pricing, because sellers are just like, I'm going to hold. I'm not going to sell unless I can take a certain amount of cash and move over to the next property, because the next property is going to be very expensive for me relative to what it is currently. So the people we're seeing sell had a kid, kids moved away, divorce, death. It's all the main things that really move you through life that are motivating sellers to sell. Outside of that, people are going, I've got the best interest rate I'll ever get. It's never coming back. There's no reason for me to move. So we have a situation which is so paradoxical, where you have limited inventory, especially limited motivated inventory of people who are trying to sell. And then at the same time, you have supply increasing and buyer demand dropping, but prices are not moving too much. It's a very, very weird market, but definitely a depressed market. And so we have absolutely entered a buyer's market. If you're a buyer, you can go negotiate great deals right now. You can get seller to contribute to closing costs. You can get them to pay for a rate buy down so that you can get a good rate. Ask me or your lender about that. There's a bunch of options for you if you're a buyer to enter this market and seek out a really good deal, because the people who are motivated might be very motivated. And so you could see someone who, real price is here, the price you could negotiate in this market is here, but the price that you could potentially negotiate on someone who's really motivated is here. And you come in and get a screaming deal with other incentives and stuff like that that you just won't get in other markets. So if you're a buyer, there's absolutely deals out there. There's always a deal out there. You've just got to be cautious and be working with the right professionals and have good guidance and all that. So we are in a very serious housing crisis. Prices need to adjust or rates need to adjust. But rates are not going to adjust in a meaningful enough way for us to see an impact. And that's absent a serious economic downturn, broadly speaking, and the Federal Reserve coming in with quantitative easing. And so if the Federal Reserve decides to do quantitative easing and print money, you could see rates drop again to 4s and below. Again, that would take a very serious economic downturn for them to consider doing that. What was happening prior was the Fed was the entire secondary market for mortgages. They were buying all the mortgage-backed securities. And they were participating in the bond purchasing market. Their portfolio was huge. Their books was massive. They added so much to their books. And since 2022, in addition to the increase in interest rate, they also stopped and they started releasing everything. They were selling something like $80 billion in mortgage-backed securities per month. It was a massive amount that they were liquidating off their books, so that now the normal market was what was taking place. People, normal investors, rather than the Fed backstopping everything, started being the person who was the people who were buying mortgages, mortgage-backed securities, or bonds. And so the open market is looking for a higher yield. They want a higher return on their investment. What the Fed and their quantitative easing had done, they had pushed rates and that market incredibly low, and the normal market doesn't want a rate of return that low. They want a rate of return at the best possible rate that they can achieve given that product and the security of that product and the risk profile of that product and everything. So now that we're in an open market where the buyers who are buying the bonds or the mortgage-backed securities are saying, I don't want a rate that low. Even if the Federal Reserve drops their rate, it doesn't necessarily impact the bond market or the mortgage-backed security market or mortgages. In fact, it could have a negative consequence, which is kind of what we've seen. So the last time the Fed dropped the rates in Biden's presidency a couple times, you actually saw mortgage rates go back up. You saw mortgage rates go back up, and we had them hit 7% again. And then we slowly ticked back down as the Fed stabled off. And then everyone priced in that rates were going to go down after the Federal Reserve cut rates, and so the whole market kind of moved in that direction. And then the Federal Reserve dropped rates and mortgage rates went back up a little bit, because the bond market is saying, I don't know if we have enough faith in the dollar, enough faith in this product to purchase it at a lower rate. We want it at this rate, and then it's worth it. And so the Federal Reserve is also in a very tricky situation where if it drops rates, you could see a lack of confidence in the dollar come, where people start going, oh my gosh, they're just printing money, they're going to become insolvent. I mean, we're already facing a very serious national debt and debt crisis in general. And so if the Federal Reserve drops rates and is like, let's turn on the printing machine again and let's just blow money into the economy, you could see investors, the people who buy bonds, buy mortgage-backed securities, go, I don't know if I have faith in the dollar as much anymore. Therefore, I want an even higher rate of return on what putting out there. And so you could see rates go up. It's a very tricky situation that they're in right now. And they're balancing a lot. And so I think that you need to consider your motivation if you are a buyer or a seller. You need to consider how motivated you are, what your risk tolerance is, and then you need to speak to professionals so that they can guide you through this, because this is going to be chaotic. This is not something where you can talk to your friend or your cousin who does one transaction a year. They don't understand what's going on in the market. You should be seeking out a professional who has their hands in it, who's witnessing what's going on, who understands the market dynamics of even neighborhoods, specific neighborhoods, like what's this neighborhood doing in comparison to this neighborhood? What's going on in the overall market? Because they're the ones who are going to protect your money, protect your asset, and guide you through this tumultuous time frame. It's not worth it to risk going with an agent who is really not in the business and getting their hands dirty and understands what's going on. So obviously, chaotic. I've given you a lot of information that's hard to digest and understand. And even I'm tripped up about some of it. If I had a crystal ball, I could tell you, here's what you should invest in, here's what you should buy, here's what the market's going to look like in 6 months. All I can tell you is right now, if you're a motivated seller, you're adjusting your price. If you're a buyer, there's great deals out there for you right now. You just have to be particular in what you're going after. And so with the right guidance and with enough contemplation and serious activity, I think anyone can play in this market and do a very good job. But be certain to work with professionals and get good guidance, and call us with any questions. We're happy to answer anything that we can.